Why does it seem like every time the world panics about money, the rich just get richer? Is it luck? Insider trading? Magic? No, it's a strategy. And today we're pulling back the curtain on how they do it. Because money doesn't just disappear in a crisis, it simply moves. And the ultra-rich have a map. When you see a market crash, stocks plummeting, headlines screaming disaster, you're seeing chaos. But the world's wealthiest see something else entirely, a clearance sale. While the average person is frozen by fear, watching their savings shrink, the elite are already executing a plan they've had in place for years. They don't just react to crises, they anticipate them. They know that what goes up must come down, and they prepare for the downturn while everyone else is celebrating the boom. So how do they do it? Let's start with a fundamental truth. The wealthy don't play the same financial game as the rest of us. Your financial security might be tied to a paycheck and maybe a retirement account heavily weighted in stocks. Theirs isn't. Their wealth isn't just numbers on a screen, it's stored in tangible, resilient assets. We're talking about sprawling real estate portfolios, priceless art collections, essential commodities like gold and oil, and stakes in private companies that aren't tossed around on the public market. These are things that don't evaporate overnight when Wall Street has a bad day. They have a physical, intrinsic value that provides a powerful buffer against market volatility. Think of it like this. If the stock market is a raging river, they've built their house on a mountain high above the floodplain. But holding assets isn't enough. The real secret weapon during a crash is liquidity. That's a fancy word for having cash, or things easily converted to cash, ready to go at a moment's notice. While most people have their money tied up, the wealthy make sure to have massive reserves of cash standing by. Why? Because when the market tanks and everyone is desperate to sell, cash is king. When your favorite stock drops 50%, you see a 50% loss. They see a 50% discount. It's the ultimate Black Friday sale for assets, and they are the only ones in the store with a full wallet. While the middle class is desperately trying to recover their losses and waiting for the market to come back, the rich are quietly buying up everything on sale, undervalued companies, cheap real estate, entire portfolios, at a fraction of their pre-crash value. This is how generational wealth is not just preserved, but exponentially multiplied during a downturn. They aren't just surviving the storm, they're harnessing its power. Now let's talk about diversification. You'd have probably heard the advice, don't put all your eggs in one basket. For most people, that means a mix of stocks and bonds. For the ultra-rich, that's child's play. Their idea of diversification is global, multi-layered, and almost fortress-like. They aren't just diversifying across asset types, they're diversifying across continents, currencies, and political systems. They might own farmland in South America, a stake in an emerging tech startup in Southeast Asia, a vault of gold in Switzerland, and a network of data centers in the United States. This global web of assets means that no single market crash, no political upheaval in one country, no currency collapse can wipe them out. If the US market falters, their European real estate holds steady. If the euro weakens, their investments in Asian technology are soaring. Now, their wealth isn't a single tower that can be toppled. It's a vast interconnected network with redundancies built in. It's designed to withstand anything. But perhaps the most powerful advantage they have isn't money at all, it's information. And I don't mean the 24-hour news cycle you watch on TV. By the time a crisis hits the mainstream media, it's already old news for them. The ultra-rich operate within exclusive networks. They have access to private briefings, top-tier economic analysts, and insider circles that signal when and where to move their capital long before the public even senses danger. They aren't waiting for the news. In many ways, their movements are the news. They hear the first rumbles of the earthquake while everyone else is still asleep. This early warning system allows them to shift their money out of harm's way and into safe havens or into cash right before the storm hits. So when the crash finally arrives, they haven't just avoided the damage. They're perfectly positioned on the sidelines, ready to swoop in. And when the collapse is in full swing, that's when they make their move. This is the transfer of wealth in its rawest form. They don't panic sell, they strategically buy. They acquire distressed companies on the brink of bankruptcy, knowing they can restructure them and turn a profit. They buy up commercial real estate and apartment buildings from owners who can no longer afford their loans. They gobble up entire industries that have been battered by the recession, purchasing them for pennies on the dollar. This isn't about luck. It's the culmination of patience, liquidity, and a plan. Just look at the 2008 financial crisis. While millions of people lost their homes, their jobs, and their life savings, the world's billionaire class saw their collective wealth double in the years that followed. They saw immense opportunity where everyone else saw only despair. And when the dust finally settled and the economy began its slow crawl back to recovery, who do you think owned that recovery? The very people who bought it at the bottom. So, what's the ultimate takeaway here? The rich aren't magicians. They don't have a crystal ball. They simply operate on a principle that many of us forget. Crises are not anomalies. They are inevitable cycles. The market will always have its ups and downs. But instead of fearing the downs, they prepare for them. They build their financial fortresses during the good times so they can go on the offensive when the bad times arrive. They trade on discipline and strategy, while the rest of the market trades on emotion and fear. That is the fundamental difference between panic and power. So the next time you hear the word crash, and you feel that knot of fear in your stomach, remember this. It's not the end of wealth. It's simply the great transfer of it. From those who fear the storm to those who have spent years preparing to sail right through it. Thanks so much for watching. If this gave you a new perspective on how money works, hit that like button. And subscribe for more deep dives into the world of finance and strategy. See you in the next video.